types of support resistance area. We call this fill gap SR by Forex Surabaya. What is fill gap SR? 1, 2, 3, 4 push strategy by Forex Surabaya. What is 1, 2, 3, 4, 5 push strategy?
Mastering market movements, support and resistance. Are you tired of staring at charts, wondering why the market moves the way it does, or why your trades always hit those frustrating levels in reverse? The secret is right in front of you, and it's called support and resistance. But here's the thing, most traders get it wrong. They either draw their levels incorrectly or don't know how to use them to predict market moves. That ends today. In this video, I'll walk you through the ultimate guide to mastering support and resistance, the same strategies professional traders use to predict breakouts, avoid fakeouts, and catch reversals like clockwork. These techniques have helped me and my students turn losses into consistent profits, and I'm going to share everything with you today. So grab a notebook, smash that like button, and subscribe to support the channel, and let's dive in. Alright, let's start by understanding why support and resistance levels are the foundation of every successful trading strategy.
Support and resistance mastery. Predict market moves fast. In this video, we will talk about 4 types of support and resistance, which we will explain to you everything. Make sure you follow all our video from the start until the end to get the whole strategy.
I am a Forex trader with 16 years of experience. I'll share valuable trading insights that I'm confident will help you improve your trading skills. Apology. English is not my first language, and I know my English has mistakes in grammar, word choice, and pronunciation. I'll do my best to explain everything as clearly as possible using simple English. I hope you can understand the key points to help improve your trading skills. Enable English subtitles. Please turn on English subtitles for a clearer understanding of my videos. Don't choose English auto-generated. Everything we share in our videos can be applied to trading Forex, gold, stocks, indices like Nasdaq and Dow Jones, options, and cryptocurrencies. Our strategies work across all time frames, monthly, weekly, daily, H4, H1, M30, M15, M5, and M1. Watch all our videos to gain a deeper understanding of how to apply the education and strategies we provide.
What is support and resistance? Support and resistance are price levels or areas where price struggles to continue to its trend. Support is an area where a downtrend tends to pause or reverse due to increased buying interest. Resistance is an area where an uptrend tends to pause or reverse due to increased selling pressure. Okay, let's see some example here. This is support. After downtrend, price cannot go lower, so the buyer push the price to the upside like this, like here, and then price try to push to the downward, and then buyers push again to the upside, and then seller once again try to push the price lower, and then buyer pushed again to the upward, seller push again to the downward, and then buyer win, so the price move to the upside. So this blue box area is a support area. This one is also a support. After this big downtrend, price stop here, and then price start to move higher. Here, go higher again until this level, and then price go down again until this level in this support area, and then price to move up again. So this green area is a support area because price cannot move to the downside below this support area. After a big uptrend, then price start to pause for a while. See, after reach this area, price start to go down. The seller push in to the downside and then push again here and then push again, so downtrend is began. Okay, so this blue box called a resistance area. This is an example about resistance again after a big uptrend. After price reach this level, and then price struggle to go to the upside. Price start to sideways or take a break for a moment, and then after this, seller push the price lower here, and then buyers tries again to move up and then fail. The seller move the price down. So this box area is a resistance area. Why are support and resistance important? Support and resistance levels are key areas where smart money or big players place their orders. Because their orders are so massive, they manipulate the price to attract other traders to take the opposite side of their positions. To absorb such large orders, these players often repeat the manipulation process several times. As retail traders, our goal is to enter the market only after this manipulation is complete. It's crucial to think like smart money and follow their moves rather than fighting against them. Okay, let's see some example. This is support area. After this big downtrend, price make a very huge to the upside and at around the same level as the origin level high, and so we can see that price rejected at this area. We can mark this area as a support because in the future price has a very big possibility to visit again this level like this, and then price start to go down again and then go to the support area, and then price tries to close below this support area, below the low of the support area here. This is an example of manipulation. After retail traders see this big bearish candle, they start to sell, and then after retail traders sell, the smart money tries to buy again, like here. This candle, this candle, this candle, all is bullish candle. It means that price rejected to go lower and then start to go to the upside. As retail trader, after this manipulation, we can start buying at this area. After the price close, we can start buy. Okay, we have to wait until the manipulation over. So this is a resistance because after this uptrend, price make a doji right here and then price start to fall down like here. So we can mark this area as a resistance area. And then price tries to go up and close above this high of the last resistance, close above here. After retail traders see this price close above the high of the resistance, most of retail traders start thinking, oh, now is the time to buy because price will start to go higher. And what happened? Price went high a little bit and then start to go lower and start to go lower again. And then price tries to go up again and break this resistance, high resistance, and fall again. Once again, price cannot break higher, and tries again, break high, and then close to the low of the resistance area, and then price start to go down then. So in this example, we can see there is three types of manipulation: here, here, and here. As a retail trader, we have to wait until all of this manipulation over. The wise place to go sell is when price close around here. We can start to sell. Okay. Now we will talk about four types of support and resistance. The first type, we can call it horizontal support and resistance. We can make it simple to say SR, horizontal SR. It means support and resistance. What is horizontal support and resistance? So this blue area is a support area, and we mark this as a horizontal level or horizontal area. This is support because price cannot go far below this support. After price close below this support area, and then price reverse to the upside and close above this support area, and then price go higher. So this is a very good example of support, and there is a manipulation right here. Once manipulation in this example. This is a support area too, because after price reaches this level, buyers take control to push the price higher, here and here. And then price tries again to go lower, and price cannot break below this support area. And then buyer make a very big push here to the upside. So this is a very good sign that buyers has dominated this trend. So we can buy at this level. Okay. This is a resistance example. Horizontal. After price go up, reach this level, price slows down. You can see that a very small candle run here in this area. It means that there is no buying power anymore. So, and then the best sellers take control and push the price lower. When price move here, we can start selling in this area. Okay. This is a resistance too, because after the uptrend, price make a very huge reversal to the downside here. Very big power. Seller puts the price very low until this area, and then the buyer takes control again, push the price higher, and break above this resistance area. Many retail traders think that, oh, this is a very good time to buy. So they place the buy position right here, and then price move up for only one candle, and then price make a doji. Then sellers come in. Sellers come in and make the price to go lower. And buyers push the price again to the upside until reach this resistance area. And the sellers push the price back until this very strong downtrend. Okay, so this is a example of manipulation. There is two manipulation here and here, because price move above this high resistance level. Okay, so this is a horizontal support and resistance example. This is in this area we call this resistance, because after uptrend price tries to go lower right here, and buyers tries to push the price higher, go inside the resistance, and then price move low again. So this double top, this is a triple top, 1, 2, 3, we can call this a resistance area. But after price, buyers close above here, close above this high of resistance, price still go up until this candle. And then we can mark this area, it will become support. Why it becomes support? Because after seller push the price down, the seller cannot push the price lower than this support area, and then buyers take control again to push the price higher. Price tries to go down again, only touch this support area, and then go uptrend again. So this is a resistance become support. Okay. This is another example about resistance become support. This is a resistance because there is a two double top. This first top, second top. After price push the price high until this level, and then sellers take control, push the price lower until this level, and buyers push up again, and then sellers, very strong candle here, push the price lower, okay, until this level, and then buyers push the price up again. In this case, the price close above this level, above this high, and above this high, close right here. And then sellers try to push the price to the downside, but the sellers fail. They only can push until this support area, and then buyers come in and push the price to the upside. So this is the resistance becomes support. This is an example. Resistance becomes support again. It's a resistance. Price cannot push, cannot go higher. Buyers tries to push price at this level and then fall. Sellers take control, and then buyers come in and break this resistance level until this level. So we can mark this resistance to the right side like this. After this break to the upside, sellers come in, push the price lower but fail. The sellers go down, push the price lower until touch this support area, and then buyers come in again. Seller tries to sell and close below this support area. Many retail traders think that, oh, this is a very good place to sell. But what happened? buyers push the price until close above this support area right here. Sellers tried once again, then failed. And buyers comes in a very big candle. This is a very good sign that buyers winning this battle, and we can buy right here. So this is a support become resistance. After sellers push price until this area, and then buyers push the price to the upside. So this is a support area. And sellers once again try to push the price lower until break below this support, and buyers come in, push the price to the upside and fail once again. Buyer push again and fail again because cannot close above this high. And then sellers very big candle, one candle, two candle, big bearish candle. This indicates that sellers are dominant. And then buyers push the price up again but fail. Sellers comes in. So this is a very strong support and now becomes resistance. After sellers push the price until this area, buyers once again tries to push the price above here but fail. After reach this area, resistance area, sellers come in this 1, 2, 3, 4 candles. So at this point we know that sellers are dominant. There is no buyers power again because this close below this body, open body of bullish candle. We can start sell right here. Okay, so this chart we can see that this is a sideways because price go up, down, up, down, up. So there is no clear direction. We can also mark this level as support. Why? Because after sellers reach this area, buyers come in and push the price high. And sellers push the price down until break this support, until reach this support area. So we can also mark this level as resistance because this is a very huge downtrend. Okay, and then after this area, buyers come in again, push the price higher, break above this support, and then price tries to go down but fail, up again, tries to go down, fail, up again, until reach this resistance area. So sellers come in, fail, and buyers go up, push the price up until this area, break above this. Many buyers, many retail buyers think that this is a very good momentum to buy. But what happened? Once again, sellers push the price to the downside. Very important that you have to know when sideways like this, we have to be careful when to try to open position. Don't try to buy at this upside. This is up, this is low. This is upside, this is low side. Don't try to buy at this area because in scenario like this, sideways, there is a big possibility that price can go up, down like this. No clear. So if you buy here, you will suffer because price can go lower and touch this support area. Okay, so if you want to buy in sideways area, make sure that you buy at this low area right here. If you don't know where is high, where is low, you can see this is the lowest and the highest, and this is in the middle. So the good place to buy is below this 50%. This is a area where you can buy in sideways market. Okay. Next. So the second types of support and resistance, we call this diagonal SR. What is diagonal SR? Diagonal SR is using this trend line. Okay, you can see this trend line. This is a diagonal. This line can act like support. So this is because price after this buy uptrend, sellers try to push down, then fail, and very strong power of buyers push the price very fast to the upside. So this level and this level, we can call this support. We can connect it with a trend line like this. Usually, when price touch this trend line, this line can act as a support. We can see this. After sellers touch this trend line, buyers come in and try to push the price higher. Very small candle like this, but fail. This is a very huge bearish candle close below this trend line. It means that current momentum, the uptrend has finished. There is two possibilities, whether it become sideways or to go reversal. In this example, it becomes sideways because after this down move, buyer push the price up again here until close above this big bearish candle. Okay, next. This is a diagonal support resistance. After buyers comes in and sellers cannot push the price lower, and it act like a magnet. So we can put a trend line right here. Okay. After sellers close below this trend line, it means that current momentum price want to go lower like this. But this is only a retracement. This is the uptrend, this retracement, and then price tries to go to the original direction, which is to go to the upside. The buyers take control again. This line is a diagonal support resistance. We can see at this level, this, and this, sellers cannot push the price below this trend line. After touching this trend line, buyers come in and push the price to the upside and make a double top right here. 1, 2, and then price tries to push the price lower until touch this support, and buyers come in again and then push the price to the upside again. Okay. This is a diagonal support resistance for a resistance. We can see this. Buyers cannot push the price higher. So after touching this trend line, sellers dominant to push the price to the downside. But here, seller push, here, sellers push again, here, sellers push again, here, sellers push again, and sellers push again here, and then fail. Buyers tries to take control because this candle closed above this resistance and continue to go to the upside. It means that at current level, this downtrend momentum has over. There's two possibilities, whether this is a sideways or a reversal to the upside. Okay. Now this is a resistance. this trend line is resistance and becomes support. After the price touching 1, 2, 3, touching sellers dominant, push the price lower, and then at this level, buyers take control and push the price high and close above this resistance trend line. Close here and close here. It means that the downtrend has over. Sellers push the price to the downside again until touch this resistance trend line. But after one push, two push, and then buyers come in. In this candle, we can see that this candle closed above this resistance area and then once again close here and then close here. At this level, we can see that this downtrend has over. We can start to buy here. Okay, and put your stop loss below this trend line. Okay. This is a resistance becomes support. Diagonal resistance becomes support. So after this 1, 2, 3, 4 touching, sellers has dominant, push the price lower, and this candle, buyer comes in and close above this resistance, and once again close here above, and once again close here above. So we can see that this downtrend momentum has over. So don't try to sell again. We have to see whether this is a sideways or uptrend. In this case, this is an uptrend because sellers try to push the price lower but fail, and then buyers come in with a very strong momentum like this. We can put buy at this level because this is a very strong momentum and it's happened in this support area. Okay, this is also a resistance becomes support. After 1, 2, 3 touching, sellers have dominant, and at this level, buyers come in and push the price to go to the upside and close above this resistance. Close here, above here, close here, close here. So we can see that this is this down move has over. Okay, after this uptrend, the sellers come in and try to push the price lower at this support area. Okay, and the third types of support and resistance, we call this dynamic support and resistance, or we can call this dynamic SR. What is dynamic SR? In this example, we can see there is a indicator. This is a moving average indicator. The blue one is a simple moving average for a period of 5. This is low, simple moving average, and this is high, simple moving average. And the red one is simple moving average of 50 period. So this one is low SMA, this is high SMA of 50 period. Okay, so this the blue line, this moving average can act as a dynamic support. We can see this example. After seller to the downside until close below this low of moving average, below this low, and then price go to the downside. So this high moving average can act as a resistance, dynamic resistance. But what happened here? Buyers push the price up to go to the upside until close here above this high moving average, high SMA. After close here, so this low of moving average can act as a support, dynamic support area. Okay, so see this. After touching this area, buyers once again push the price to the upside until here. Very big bearish candle close below this low of SMA, and then price go down. But at this level, buyers comes again. And let's see another example. So here we can see that this low of moving average can act as a dynamic support. After price break below this support, and then the sellers push the price lower, and at this level buyers push the price higher, close above this, and then fail because this is a doji, and sellers come in again, try to push the price lower again, and then the next candle, this is a very big bullish candle and close here. It means that these levels are a support area. So support area is this level and this red moving average. Okay, this is long-term moving average 50 period, and the blue one is short-term 5 period of SMA. We can see this price keep push above this support, dynamic support. Okay, and here sellers push the price down until close below this low SMA and close again here, and then suddenly very big bullish candle push the price and close above this high SMA. It means that price refuse to go lower and start to go to the upside. So this line, low SMA, act as a support line. Okay, so this example, we can see that after sellers push the price to the downside, after reach this level, price start to go doji, like here 1 2 3. This is a doji. It means that price refuse to go lower, and big bullish candle goes above this high of SMA. It means that price wants to go to the upside, and this low line SMA act a dynamic support. Okay, we can see here when sellers close below this, below the low of the SMA, it means that price try to push to the downside but fail because buyers come in and price close above here, and buyer close again above high of this moving average. So this is a resistance area. So this is bearish candle close below this low of SMA. So there is twice, 1 2 close below the low, and price start falling. When price touch this high of SMA, this is a dynamic resistance, and price go lower again. After price touch this low of this red SMA, price close here, and then buyers come in and push the price high, close above this high of blue SMA. It means that this is a support area. Okay, this is support, and this red line also low of this red SMA also support, low of this blue SMA also support. here, after price close below this low of blue SMA, the next candle, a bullish candle close above this low. So this is a support again. And then price close above this resistance area. Here we can see a manipulation. It happens 1, 2, 3, third times. Okay. Sellers come in, push the price lower, and when this bearish candle close below the low of red moving average, and then suddenly buyers come in and tries to push the price close above this low of red SMA and above this low of blue SMA. It means that this is a very strong support area. And once again, buyer push the price above this blue SMA and touch this resistance of red SMA, and price tries to go down again once again, but fail because after close below this low of red SMA, price close above this low of red SMA and start to go higher. Okay, and this is a manipulation. We have to be careful. In this case, when price close above here, we can start buying, or you can buy here, you can buy here. The fourth types of support resistance area, we call this fill gap SR by Forex Surabaya. What is fill gap SR? I will explain to you. See this blue SR. After price close above here, above blue box, and make higher like this. So this is an uptrend, and then this fill gap SR acts as a support. Why? Because sellers try to push the price lower, but it failed and make a gap. You can see this gap, this low didn't touch this high of this candle. So there is a gap between here and here. And this is a very strong support too. Let's see another example. Here, after this huge bullish candle, it makes a gap again. Here we can see that this high and this low didn't touch. So there is a gap. So this is a support resistance fill gap. You have to be aware of this kind of support resistance area. Here again, after this big bearish candle, price make a gap because this low didn't touch this high. So when price come back to this gap, price tries to go lower without touching each other. This is called a fill gap resistance. And see this blue box, this is also a fill gap support. You can see that this low didn't touch this high, and this low also didn't touch this high. So this is a fill gap support. You have to aware because this is a very strong support resistance area too. Like here in this example, after this 1, 2, 3, 4 bullish candles make a gap right here because this high didn't touch this low. So this is a fill gap support, and this is a very strong. You can see that after touching this gap, buyers take control and push the price very strong to the upside. So this is a very strong fill gap support. We can see this. There is a free fill gap. This is a resistance fill gap. This is a resistance fill gap, and this is a fill gap support. After price push lower and then went up again, and there is a gap between this high and this low. It didn't touch, so this is a very strong fill gap resistance. this one too. After sellers push the price very strong, there is a gap here because this high didn't touch this low. So this gap is a fill gap resistance. Here, after this big bullish candle, and it make a gap too. Because this high didn't touch this low. See, it didn't touch. So this is a very strong level too. You have to aware about this fill gap support resistance. This one too. After this very strong bearish candle, push the price lower, and this low didn't touch this high. So when price come back again, make a retrace to the upside, this high failed and didn't touch this low. It leave a very strong fill gap. If you see this kind of fill gap resistance, you can start sell right here. After this big bearish, you can start sell right here. You can confident because there is a fill gap resistance right here. Okay, the next trading strategy, we call this support and resistance trading strategy. We call this name by 1, 2, 3, 4 push strategy by Forex Surabaya. What is 1, 2, 3, 4, 5 push strategy? This is very excited that you have to aware when you trade by yourself, because this is a very powerful 1, 2, 3, 4, 5. Sorry, 1, 2, 3, 4 push strategy. Okay. Pay attention to 1 push, or 2 push, or 3 push, or 4 push. This 1, 2, 3, 4 push, this is very common push that price like to make. You have to aware when there is a 1 push, 2 push, 3 push, and 4 push. What I mean is, like in this example, after this downtrend at this level, buyers take control by push the price up and close above this bearish candle. So this is a support. This is a 1 push, because after 1 push, price start to go to the uptrend. This is downtrend. After 1 push, price tries to make a uptrend move. So this is a 1 push example. This is a 2 push. Because after this huge bullish candle, this area is a resistance area. Why? Because bullish candle cannot push the price higher. After this bullish candle, price tends to take a break, make a very small candle right here, and then sellers come in and push the price lower. So this is 1 push. This don't move is a 1 push. And then buyers push again to the upside and then fail, and this is a second push. Why? Because this bearish candle 1, 2, this 2 bearish candle close below this resistance. So there is a 1 push, 2 push. After 2 push, price go to the downtrend like this. You have to aware situation like this. Okay, next example. Okay, here, this is a 1 push. After downtrend, only need 1 push, then price to go to the uptrend. So this is 1 push, but this one is 2 push. Push here and push here, and this is a support area. This is a support area, and this candle close above this support area. This is 1 push, and then fail, go down again, and then seller close the price below this support area, and this buyer comes in and close here. So this is second push. This is 1 push and 2 push, and then start to go to the uptrend. You have to aware of this behavior. Sometimes 1 push, sometimes 2 push. Okay. In this example, you can see that there is a 3 push. 1, 2, 3. because this red candle closed below resistance. So this is a resistance area. This red bearish candle closed below this resistance area. This is one push, and the second push here, this bearish candle closed below resistance area, and then the third push right here, this bearish candle closed below this resistance area. You can start to sell here or here. Okay, after 3 pushes to the downside. This is also an example of 3 pushes. So this is a resistance area because this big uptrend stopped right here. After this big uptrend, there is a big bearish candle. So this is one push, this candle, because the candle closed below this resistance area, and then buyers try to push the price higher and then fail again here. It cannot close above this resistance, and then sellers come in, push the price close lower of this resistance area. So this is second push, and this one is third push because price close below this resistance area and below this bullish candle. After 3 push, price move to the downside, become downtrend. So this example is 4 push. This is an uptrend until here, and then sellers come in and push the price lower. So this is a resistance area. So this is first push, second push, third push, and fourth push. After fourth push, price go to the downside. This one too. This one for push or a support. So after this down move, price cannot close to the downside anymore, and buyers comes in. Buyers come in and close here. This is one push because the price closed above this bearish candle, and this is second push. Price closed above this bearish candle. This is third push. Price closed above this bearish candle, and then sellers come in again, and then buyers once again push the price higher and close above this 2 bearish candle. So we can call this 4 push. 1, 2, 1, 2, 3, 4 push. And after 4 push, price go to the upside. You have to aware this kind of movement. So this is an example of 4 push at the resistance area. So here we see that this is a very big uptrend, and after this big bullish candle, price start to slow down, take rest. So this is a resistance. Here there is a 4 push, 1 push, 2 push, 3 push, and 4 push. After 4 push, price just fall down to the downtrend. Okay, next. In this example, this is a support area, this blue box, and there is a 4 push right here. Why this is a support? Because after this downtrend, price rejected to go lower and start to rise here. So this is a 1 push, and then fail. Price tries to go down again here, and there's a 2 push to the upside, fail, and price try to go down again here, and there's a third push here, and this is a very big downward, and buyers tries to make the price higher until this level and get rejected in this. This is support and become resistance here, rejected to the downside, and there is a 4 push after this candle close inside this support, and then this candle close above this support. So this is for push. We can start to buy. Usually price before there is a reversal. Usually there is a 1 until 4 pushes. Okay. Now let's see some example in a real chart. Now we see gold. This is an uptrend, and after this level, these sellers push the price downward. So we can mark this as a resistance area. So this is one push and two push, and price start to go down, and buyers try to push the price to the upside. Right here, after touching near this resistance area, there is a big bearish candle. So this is one push and price go down. Now let's see Euro USD. So this is a very big up move, and after this up move, price get sideways right here, and price tries to go down. So this is one push, two push, three push, four push. This is a downtrend. After this big bearish candle, we can mark this as a support area. This one push, two push, and three push. Okay, and price start to go up. Let's see GBP USD. This is an uptrend, and there is a let's mark this. This is a resistance area. Why? Because sellers try to push to the downside. One push, two push, three push, four push. In this case, there is a 5 push, then price to go lower. Okay, 1 push, 2 push, 3 push, 4 push, 5 push. Let's see USD JPY. See here, after this bullish candle, big bullish candle, so this is a resistance area. Why? Because in this area, price tries to push down here, and then break to the upside of this resistance area, and then price goes again to the low and come back again to this resistance area and push the price to the downward. Okay, so this is a manipulation area. You have to be aware of this kind of support resistance. Now let's see AUD USD. So this is just resistance, and this is a sideways. Price doesn't go anywhere. This is a resistance here. After resistance, because price doesn't want to move higher, the sellers come in. So this is one push. Buyers tries again to push to the upside and then stop here, and sellers come in, second push, fail, and buyers tries to push up again, nearly touch this resistance area, and then this three push, sellers win and price to go down. Let's see some example in USD Canada. This one is a resistance right here. The sellers come in to push the price downward. So this is one push and fail. Buyers push the price until close above this resistance and then fail. And the next one, the second push, the sellers succeed and price go to the downside. Okay, so this is one push, two push. Okay, why this is one push? Because this close below this big bullish candle. This one too. This close below this open of big bullish candle. So this is second push. Let's see USD CHF. Here is a resistance too. So this bullish candle. After this bullish candle, sellers try to push the price downward but fail. So this can be considered one push, fail, second push, third push, fail, and then fourth push. After fourth push, downtrend began. Here we can see this is a downtrend. This is just a retracement, nearly touched. We can call this a fill gap. This area here is fill gap resistance. If you forget what is fill gap resistance, you can watch again this video. We have talked about fill gap resistance. So after this fill gap resistance, price go to the downside. Okay. Now let's see GBP JPY. This is a very good example for support. This is a support. This is a support. In this area, buyers try to push to the upside. This is one push and fail, and sellers push down again. This is second push. After this, sellers try to push to the downside again. After touching this support, buyers push again. So this is three push. One push, two push, three push, and uptrend began. Now let's see Nasdaq. Okay, this is a very good example. After this big bullish candle, price to go sideways, like here. Just go around this resistance area, and this is also a manipulation. You have to be aware of this, because after bullish candle close above this resistance, you can see this 1, 2, 3. This candle tries to make retail traders think that this is a start of uptrend, but it's just a manipulation. Price start to go down again and close below this resistance. You can start selling right here. If you are an aggressive trader, you can sell here, you can sell here, here. This is conservative, this is aggressive sell position. Okay, let's see Dow Jones. Oh, this is very nice resistance again. In this area, after this bullish candle, sellers come in and make a one push. One push succeed because price fall until this low, and then buyers try to push again until this resistance area. This is a manipulation because this wick just above this resistance area, and there is a 1, 2, 3. We can call this 3 black cross. If you see these 3 black cross in this resistance area, you can start selling right here. If you don't understand what is 3 black cross, you can watch our candlestick mastery video. Okay, we explain everything in that video, so you can understand what is this pattern. Okay, now let's see Bitcoin. This is a downtrend support. This is only one push. Price doesn't come back again. Didn't come back to this level. And this is a resistance area. If you notice why I mark this, because if there is two candles right here, two bullish candles, you can choose this bigger candle. This candle is bigger than this one. So from here to here, is a resistance area. Okay, this is one push, fail, and this is second push and succeed. There is one push, two push. Okay, that's it, traders, for today's video. Leave comments if you have anything to ask. If you have any other method of support resistance, you can share your idea with us. Or if you have any requests, you can also put your comments. So we will try to make those videos just for you. And please subscribe to this channel and give a like. Okay, see you in the next video.
If you found this video helpful and insightful, your support means the world to me. By giving it a like, subscribing, and sharing, you're not just helping this channel grow, you're inspiring me to create even more valuable content just for you. Your feedback and ideas truly matter, so feel free to share your thoughts or request a topic in the comments. Together, we can keep learning and growing. Thank you for being such an important part of this journey.